Hey everyone, I wanted to give an update on my personal journey to 100 doors. It's been a while since I made a post, and I just kind of wanted to go through and talk about what I've been up to. So the last acquisition was about 6 months ago. I'm up to around 40 units, and there has been no purchases since, then. And a lot of what I've been thinking about is, it's this journey to 100 doors. It's not a race to 100 doors. It's a journey, and I'm reminded when markets fluctuate, it's good to take, implement some levels of patience in making sure that you're not just making a decision to get to the goal. And it's getting quality doors, not just a random 100 doors, and then you've got a portfolio maybe that you're not that happy with, or you bought product you maybe shouldn't have bought. It doesn't fit what you're looking for. It doesn't fit your objectives. So with the 40 units, I can say that I've learned a lot about locations and then operating these properties for profit and cash flow. So the current holdings are, I've got 12 units that are in Costa Mesa. I've got a couple partnership deals in Costa Mesa, and then and these are all like triplex, fourplex assets that I've got consolidated as 12 units. And then there's a property in Westminster, a property in Placentia, and a property in Orange. And, as I kind of got started buying a plex here and there, you buy where you can find an opportunity or something that makes sense. I like single story assets. So there was a single story property in Orange that we did a video on that I picked up, and it made sense. But then just locations, that's a lot of different locations. There's a lot of different properties. So there's a lot of inefficiencies there. So I think as I've been looking to make another acquisition, and I'm excited for whenever that comes, I'm not rushing. But when it does come up, I am looking more about finding something that I can consolidate into. Costa Mesa has been a core market. I live nearby. I can go buy the properties very frequently. I've got a lot of our trades folks are already there kind of managing, overseeing the properties. So it makes a lot of sense to make the next purchase in Costa Mesa. I still really like the submarket. Homeownership is so expensive, and a lot of folks want to live here. So I have been predominantly looking in Costa Mesa for a plex. A lot of them just haven't come up. So those are the things that are on my mind. And, I also am thinking, just when I am managing these properties for cash flow and just trying to get my arms around everything, we've already stabilized a number of the assets. And fortunately, the debt that we have on them, the interest rates are all mostly in the threes. I've got one property over 4.3% in Placentia, but everything's on IO. So we're really making sure that any new renovations, I've got a turn coming up on that 8 unit in Placentia right now. And what we would have maybe set a budget for, we're cutting some of that budget back just because the rental market might soften a little bit, and we're looking at the bottom line. So these are all the things I'm doing, even though the journey, it's still, I'm still part of the journey, even though it's not increasing the unit count. And I think that's really important for everybody that's got goals. If you're trying to get a building, or it's taking longer, or now interest rates are higher and you can't make the numbers work, like we're all in that part of the journey together, right? But this is what I'm going through. So it's taken exercising patience, staying disciplined. The right opportunities will come up when they arise. You just got to be ready. So I've got my funds ready. I've got my lender relationships ready. And I think another thing too is like working with what I've got. So I'm open to selling the 4 unit in Orange, for example. Why? One way, why would I sell it? And this kind of aligns with like how we help a lot of investor clients in the market. They're like, why would I sell when I've got, for that particular property, it's 3.875, I believe, 7-year IO. I'm only in like month 9 on the IO. So I've got 6 years left of IO. Great cash flow, great cash on cash returns. Why would I get rid of that when I have to go get an interest rate at 6% today, right? And you can get kind of hung up on that. So, and it's a very big concern. But if you're open, I'm staying open. I'm not making a move, but I'm staying open to see when the pieces kind of fit together. So maybe there is the right plex that comes up, then I can trade that equity, maybe add a little more cash, but it's down the street from one of my properties, or maybe it's a newer building. And it's not all about, the absolute bottom line. These properties need to support themselves, but also if it's taking less of my time to manage that asset and get it up and running, and long term that asset's going to appreciate better, then I'll take a higher interest rate. I'll take a 6% interest rate, and especially if I get the right price. because interest rate's one thing, but I'd rather have a higher interest rate at a better price than a lower interest rate and, you know, pay way too much. So those are some of the things where, you know, I'm dealing with it firsthand, how I can kind of get hung up on when I'm trying to manufacture an exchange. For this example, a lot of investors can get hung up too. It makes sense. But I think you just got to always be looking. I think you got to always keep an open mind. And as things kind of in the market we're experiencing right now, opportunities are going to arise. There's still a lot of buyers in the market. There's so much cash on the sidelines, but there might be the right property. Somebody calls me and says, hey, this is, you know, what do you think? And then I'm already kind of like ready to jump on the opportunity. And I think that's what we're advising our clients to do. We're making sure that they're aware of their equity positions, their cash flow, and their target criteria of what they're looking for. And we're looking for them on these bigger deals. And then I'm executing a business plan to buy the small stuff. So I'm not interfering with my clients, but you know, we're riding concurrently on the journey. So it's fun. We compare notes, we help each other out. But this is just a kind of a ramble on the journey to 100 doors, and just to really let you know where I'm at. And I don't know how long this journey takes, so we'll see. But there's going to be some big moves coming up, and I think a lot of people are optimistic, and just we don't know when those opportunities are going to come up. If it's this year, if it's next year, whatever it may be. But always be looking, always be cautiously optimistic. Never fully put the pencil down, continue to underwrite, continue to look at the marketplace, and good things will happen. So the next video we will post will be hopefully on the next acquisition. And if you want to talk one-on-one about maybe your journey, if you're looking to acquire more units, if you're looking to touch on any of the things that I mentioned in this video, if we can help out in any way, feel free to reach out, and we'll see you on the next video. Thanks so much.